Omri, thanks for joining me today. I always enjoy our conversation about business payments, automation, AP, AR, the whole thing. I mean, it is a classic topic, but thanks for making the time.
Thank you for having me.
Okay, so let's talk about business payments modernization with this twist to start us off. So we have, we CFOs have the double whammy of month-end close, March, quarter-end close, which you say can be helped along if, in fact, the payables process is automated. Help us make that connection.
Well, if you think about it, at the end of the day, a close is a review, right? It's a look back on what happened in the previous, I'd say, either 2-week setting, 1-month setting, or quarterly setting. And the more information that you have up front, organized and sliced and diced and traceable, the easier your close is. The less information you have, the harder it is. The accounts payable process, or we can go from procurement to reconciliation, right? PO to did the money move, was the bill paid, etc., is a very lengthy process, right? That's why AP departments grow. That's why AP departments look for automation. However, what everyone is looking for is being able to attribute a dollar amount in your bank statement all the way to the payment record in your ERP or your accounting software, the bill or multiple bill records associated to it. Sometimes it might be a partial payment, but it's basically understanding what is the original initiation or source of truth for why we even entertained this payment, right? Because a lot of the time when you're reconciling, you're just looking for a debit, a credit, and just trying to understand that. But a debit and credit is a minute atom of a payable or a receivable, right? So basically it compounds and you need to look backwards step at a time to understand what happened. One of the easiest ways to automate that is to have an identifier on a payment record that is associated to a bill, and then to find a way to add identifiers to payments really, really, really quickly and almost automatically if possible.
So it becomes like sorting an Excel spreadsheet with all the things organized.
Yeah, but imagine multiple Excel spreadsheets that don't talk to each other, and then you're trying to figure out how to make them talk to each other. And whether it's a bill ID, a payment ID, a text description that is very, very clear and automated, both for you and the receiving party, can go a long way. In the world of checks, you have the check memo, always wonderful if it's close. One of my favorite, you know who does this actually really well? Attorneys. Attorneys, when you pay your bill, on the check memo, you have to include the invoice number, the client number. Most attorneys have a client number. It's a crazy amount of digits, and then the matter number. It is a beautiful practice. Now,
so we should all be like lawyers. This is the.
They're fantastic at this. They actually provide very rigid instructions for their payors, right?
Because that is how they bill, is by the increment, by the client, by the matter, right?
And exactly, they're able to say, oop, this matter, we can unpack it very quickly. Now, that is one industry that does it extremely well. Most industries don't bother to engage in that. And that's why the month-end close becomes unautomated or unmodern per se. But things that are trending in the right directions is, for example, most processors and AP providers should allow you to record an ACH addenda record, which is a short description of about 80 characters that can go on a bank transfer, that allows you to match the debit to the payment record in the ERP and the bill. And then the other thing is, as we all know, RTP is gaining momentum and traction right now. And that has, I'd say, much easier to scan traceability. And they have an even longer 140 character memo that you can add to each transfer. By utilizing those things, is a really key part. And then last but not least, in AP automation, a lot of the time, AP platforms don't take the extra empathetic step to record the ACH ID or the check number on the payment record that is linked to the bill.
And so inevitably, if there are humans involved because of the lack of consistency and having to match client records to payment records to the descriptions of what's being sent across as a payment, which may not be the full payment, there's obviously a lot of opportunity for error. What's the typical margin of error as you've observed it in these processes?
I would say easily over 10%.
10%.
Easily, no problem. And the reason being, you know, in a dream world, what you'd be doing is you'd be looking for anomalies. You'd be assuming that 99% of your data was matched up perfectly, and you'd be working backwards. People work from the bill forwards rather than from the bank backwards because they have missing information. And I think that because of that, you essentially get stuck with AP clerks, controllers, etc., that send emails, send CSV files saying these are all the missing questions that we have. I mean, even we deal with it, right? You know, we have a lovely accounting department, and I get emails at the end of every month saying, what is this for? And we try to make it as obvious as possible. But the marriage between the actual bank debit or credit, the payment record in the ERP, the bill, and the purchase order, those are the things that I think about all the time, because if you have one ID, you should be able to find all other ones.
Sure.
Each ID should give you a beautiful profile of what happened. However, we're getting there. We're not all the way there right now.
So my overly simplified, like sorting an Excel spreadsheet, I realize it's much more complicated than that. But when you can group things by identifier, it certainly makes it much easier to see where you are and to where you may have have gaps. But there are a lot of innovations that are happening in and around the payment itself that are increasing the velocity of the payment, that are obviously, as you point out, creating a better descriptor of what the payment is for. But it seems like those are great, but it still goes back to how things are set up in the system. So you can make it faster, which is great. Everybody wants to be paid faster and more descriptive, but you still may end up with the same pile up at the end of the month.
Yeah, and what's really important too is that you have control over how you send the funds. So I'll give you an example. Some processors might move money on behalf of your company, and at the end of the month, give you one debit for all the money you moved. That is nearly impossible to understand what happened, right?
Right.
If there's not a clearing account or something that updates each transactions, then what you're doing is then trying to assume what this giant debit is for, how many transactions, how many vendors, if there was any chargebacks, all of these things, right? That is the most difficult version of it. Other processors will allow you to do, for example, one payment for one bill, but they don't really think through what happens when you have partial payments, or what happens when you have a batch payments, which is paying multiple bills under one payment. One of the things that we've actually been looking into lately is trying to figure out if we can inject URLs, like actual short URLs, into payment IDs. So that way, not only we get the ID number, but if we make the URL short enough, could we give you a link that you can open up, which is tokenized and secure, to say this payment is associated to X, Y, and Z.
Wow.
Yeah, it's character limits are a problem,
Right.
but I do believe in the future world that will be the way. One of the interesting things too is I actually see reconciliation being a really big problem for fintech players. So we talk a lot about reconciliation for just the modern business, right? But fintech players have to move money on behalf of other people. And one of the biggest trends that I've been seeing lately has been ledgering system that helps systems that help fintech players understand, company A, it wants to make a debit on behalf of company B. We need to credit X, Y, and Z. Those things become more and more difficult. And I think that just like we have a standard for ACH and wires and so forth, one of the biggest things that needs to happen over, I'd say, the next 5 to 10 years is a standard in information sharing to unpack what happens. Very much like, I feel like credit scoring has become easy.
Right.
Doing ID checks has become easier. We still don't have what I would call a consortium of data to help anyone at any given point of time understand what a debit was used for. The system today.
How do you get there? What do you if you were king, what would you do?
I don't think that I should be given that title. However, I would try to strike a partnership between the major bank networks. And I know that there is movement in that direction. I sat on a panel a couple of years ago, which talked about reconciliation.
Right.
And it's, let me put it this way. Sometimes companies want to withhold to their data because that is a moat or a competitive advantage.
Right.
That said, most of that data is incomplete. And what we're looking to do is figure out how you stitch what we're talking about: purchase order data, bill data, payment data, debit, bank data, and make it really easy for other folks to understand. But one of the things that I really like, actually, this doesn't exist in the United States, but in Mexico, in order to send a bill, you have to send the bill to the IRS, the actual document, right?
Oh, wow.
So when you're passing it through the government, you actually have to say, I am asking another party to pay this. I am going to move forward with it, right? The invoice has to be reviewed, scanned, and then sent to the receiving party, which I think is cool. Now, while I don't think the government should be the middle layer to do that because it might get slow, I do think that some sort of partnership between banks and ERPs can go a long way to actually attract more customers. The way we look at it is a true PO to cash and reconciliation process involves 10 to 15 human steps on average. We're trying to not only automate those steps, so you have to do less clicks, less searches, less just work, manual work. We're also trying to do a great job of identifying who logged in, what did they do, what did they click, what did they create, and trying to stitch, I'd say, the ERP data to the external party data to the recipient data and the bank data. We've constantly been thinking about, can we build what we're describing essentially would be a bank feed, an enriched bank feed, right?
Where is there still the most project to be made? If you think about the critical path, what's on the critical path of creating this environment that streamlines and makes this more efficient?
Well, so I'll make a comment that blockchain and cryptocurrency is taking a lot of that step forward. However, it's not being adopted by a lot of businesses. So I think for me, what's really important, and this is why I'm excited by RTP and any new investment in new rails. The new rails, their benefit a lot of the time is speed. However, speed without data doesn't help anyone.
Right.
So any effort to make the data more clear, I think is really critical. It's really interesting. Just the amount of data that you can get from an RTP transaction is so much more than an ACH transaction. And I understand that it will take businesses a long time and banks a long time to adopt these new ways. In the meantime, obviously, there's wonderful tools that you can buy for reconciliation and so forth. However, I do think that attaching as much data as possible, or allowing a processor or a bank to attach as much data as possible to a single transaction is truly the path.
Sounds like that's the plan. Do you believe that blockchain and crypto is the ultimate solution?
I I'm confused there. I'll tell you this. I think that blockchain and crypto is an amazing step forward to replace peer-to-peer transfer or business-to-peer transfer. What I mean is there's a huge economy of contractor payments happening over PayPal and Western Union and Payoneer. The benefit of those platforms is the recipient can get their money instantly, even though they still have to debit it out, and they might not need to have a bank account for it, right?
Yep.
That is really the appeal for a business and the recipient in blockchain and cryptocurrency, right? I can set up a wallet, I can receive funds, and it is primarily a motive of benefit for an individual, a contractor, I would say. What I haven't seen yet is the benefit of blockchain and cryptocurrency for most businesses. The problem is right now is that there's not a marketing effort at the top of talking about the business benefit of the data and automation that you can get. So by being decentralized, it does not come yet with a suggestion on how businesses can use it as an alternative to running domestic payments, which are actually very simple, but more importantly, international payments, where I think that there's going to be the most opportunity. So in the next 2 to 5 years, I actually see USDC payments, crypto payments for a contractor overseas being the most common. And that might be the biggest wedge for businesses to start to understand that, because they'll still need to figure out the currency conversion rate and still need to record it in US dollars in their ERPs. So there's a little bit of a gap. And we're trying to listen to businesses and hear how do they use these peer-to-peer platform that also have a business offering, right?
It'll be interesting to see if that dynamic includes an I want to be paid in crypto. We haven't seen it yet. We haven't seen it yet in volume. I mean, it's episodic, but haven't necessarily seen that.
And I think that what's really interesting is the concept of a stable coin, right? USDC, all of those things are actually very empathetic to business, but haven't been commercialized or adopted or just branded yet in the way to tell a business that the recipient can receive money however they want to. You can still send USD, which is actually what is mostly preferred by businesses these days, right?
People want dollars. People want dollars.
Exactly.
They do want dollars, but part of the crypto conundrum, if I'm being paid in crypto, I need to be able to then spend in crypto, and that's
what's really interesting. If you think about it today, a good example of this is Venmo is really leaning into helping their users spend money through Venmo, shopping, debit cards, all that stuff. And Venmo and PayPal are the same network, right? So it's really interesting to see these rails essentially adopt to the needs of the recipients of funds to make sure that more of those transactions can happen. So that's the next hurdle to figure that out.
Acceptance. Well, always a fascinating conversation. I think that the big takeaways are there's progress being made. There's an opportunity to do more. And I think the one insight is that, money can move faster, but without data, it's not as relevant as the speed at which the payment moves. And that's really the nut that needs to be cracked. And there's a lot of work to be done yet on that.
Yeah. And just to add to that, it's really interesting. The recipient cares about the speed, the sender cares about the data.
Yep.
And to make it balanced, you have to give them both.
What a great way to end the conversation. As always, thanks for your time.